In this episode of Explained, we're diving into something really key in the world of IPOs, initial public offerings. It's the role of the cornerstone investor.
Yeah, it's a term you hear a lot when a company decides to go public.
Exactly. So think of an IPO, right? It's this huge step for a company offering shares to the public, usually to fund big growth plans.
It's a massive undertaking. Lots of moving parts.
And one move that can really make a difference is bringing in what's called a cornerstone investor early on.
Definitely. It can really set the tone for the whole IPO.
So today, we'll break down what they actually do, why they're, so important, and we'll use Kjøller's real-world experience to kind of illustrate how this all works in practice.
Sounds good, because going public, while exciting, has its uncertainties. Getting a cornerstone investor involved from the start, while that offers a real advantage, it signals confidence. Stability, too.
Okay, let's get straight into it then. What exactly is a cornerstone investor? Can you break it down simply?
Sure. So imagine a well-respected, credible investor. Could be an institution, could be a firm like Kjøller.
Okay.
And before the company's IPO actually launches to the wider market, this investor steps up.
Right, before the public offering starts.
Exactly. And they say, we're committing, we will buy a significant chunk of these shares. It's a firm commitment made really early in the process.
Wow, okay. So it's like getting a big, solid vote of confidence before almost anyone else gets involved.
That's a great way to put it. It sends this really powerful signal out to the market.
A signal. How so?
Well, it tells the rest of the investment community, other funds, maybe even retail investors that, hey, look, this smart, credible player has already looked at this company and believes in it enough to put serious money down early.
Right. That makes sense. So let's talk about why that's such a big deal. Why is getting a cornerstone investor seen as such a win for a company that's going public? What are the tangible benefits?
Well, first off, it's fantastic for building momentum. When a well-known name makes a big commitment up front, it just naturally creates buzz, excitement, a sense that things are already moving.
Ah, okay. It gets people interested.
Definitely. It suggests there's already strong demand. And actually, you often see IPOs that have cornerstone investors get higher subscription rates from other investors down the line.
It's like that stamp of approval we talked about.
Yeah.
From someone whose opinion really matters.
Exactly. And secondly, it provides huge validation and stability. It sort of de-risks the offering for others.
Reduces uncertainty.
Precisely. If a respected firm is willing to lock in early, it implies they've done their due diligence, they see real value there. It makes other potential investors feel more comfortable.
Okay, validation, stability.
Yeah.
What else?
And, well, let's not forget the obvious. It's a direct capital infusion right from the start. That committed money is locked in early.
Right, the money itself.
Right.
Crucial. So let's bring Kjøller into this. You mentioned them. How do they fit into this picture? What's their specific role?
So Kjøller is an investment firm, and acting as a cornerstone investor in IPOs is a core part of what they do.
Okay.
They tend to focus on companies with valuations roughly between, say, $10 million and $20 million, or 50 to 100 million kroner.
So targeting those earlier stage companies making that public leap.
Exactly. And in those deals, their typical commitment can be up to around $4 million or 20 million kroner.
That's significant for companies of that size. And they have experience.
Oh, yeah. A solid track record. They've made, I think, 76 investments since way back in 2008. They did 6 last year and already 2 this year, 2025.
Wow. And what's particularly interesting, you mentioned earlier maybe.
Right. What sets Kjøller apart is that they invest their own capital directly.
Ah, okay. That's different from a typical fund managing other people's money, isn't it?
It really is. It gives them a lot more flexibility and speed. They don't have the same external committees or maybe pressures.
So they can make decisions faster.
That's what they emphasize. A straightforward, efficient process. If they like the deal, they can move quickly. And because it's their own money, they're often aligned for the long term, which is really valuable for a company just entering the public markets.
Okay, that makes sense. So if you're a company and you're thinking, maybe Kjøller could be our cornerstone, what are the specific advantages they bring? What do they highlight?
Well, building on that flexibility point, they talk about tailoring deal structures. Because it's their own capital, they can potentially shape the investment to fit the company's specific needs, maybe more so than a traditional fund.
Customization.
Yeah. And they mentioned speed. Again, the possibility of getting a term sheet, like right after the first meeting if things click.
That is fast.
And then there's the experience factor. Over 70 investments. That means they've seen a lot. They've navigated different market conditions, different challenges. That experience itself is a huge asset for the company going public.
I can imagine that kind of guidance must be invaluable when you're in, potentially uncharted waters with an IPO.
Absolutely. They also point to an efficient due diligence process. They aim to be easy to work with, not just during the IPO crunch time, but also beforehand and afterwards.
Yeah.
That continued relationship.
So, more like a partner.
That seems to be the goal.
Yeah.
Their team has diverse expertise, apparently,
Yeah.
and they really stress being upfront, honest, pragmatic communication, no beating around the bush.
That's refreshing.
And they even suggest they can step in and help if, unexpected problems crop up, which, let's be honest, is a big worry for any company going through this.
For sure.
They talk about having an ambitious mindset, go big or go home. And importantly, because they're entrepreneurs themselves, they understand the founder's journey, the struggles, the pressures.
That shared perspective must count for a lot.
They can build a much stronger relationship, definitely. They also hint at potential help with future fundraising rounds, which is always good to know. And confidentiality is guaranteed during the application process. They aim for that quick response within 24 hours.
Okay, quite a package. So what's Kjøller actually looking for? When they evaluate a potential cornerstone investment, what are the key criteria?
They boil it down to three main things, really. The fundamentals.
Which are?
First, the people,
Yeah.
the management team. Is it strong, capable, visionary? That's paramount.
Makes sense. Theme first.
Second, the product.
Yeah.
Or service, obviously.
Hmm.
Is it good? Is there a real market for it? Is it viable?
Right. Does it solve a problem?
Exactly. And third, the potential, the opportunity for growth. Can this company scale significantly? Is there a big market opportunity ahead?
People, product, potential. The 3 Ps. Sounds straightforward.
Pretty much. They're looking at the core elements that should drive success long term.
Now, thinking about the IPO process overall, how does having Kjøller or any cornerstone commit early? How does that actually influence the rest of the journey, that signaling effect you mentioned?
Yeah, it acts as this really crucial validation point early on. It signals to everyone else, other big institutions, maybe even the retail market, that a serious player has already done their homework, they've looked into the hood, and they're confident.
So it builds trust.
It builds trust and it builds momentum. It can create a kind of snowball effect,
Yeah.
Increasing demand for the shares as the IPO roadshow progresses. It also adds that layer of stability we talked about, reduces the risk of the offering being undersubscribed, makes the whole thing feel more solid.
Got it. Okay, so we've covered what cornerstone investors are, the benefits, and Kjøller's specific approach. Let's shift slightly. For companies or maybe their advisors listening right now who are thinking, Kjøller sounds like they could be a fit for us. What are the next steps? How can Kjøller actually help?
Right. So Kjøller positions themselves as that direct investor partner in the IPO. And as we said, they can bring significant capital up to that $4 million mark. They've got experience across different sectors supporting these early listings, and they're used to working alongside other investors who might come in later.
And you mentioned it's more than just the money, right? Their support goes broader.
Absolutely. That's a key part of their pitch. They offer strategic input like sparring partner kind of stuff, help with refining the company's value proposition, maybe assistance with business development contacts or strategies.
Practical help?
Yeah, very practical. In some cases, they might even offer bridge financing before the IPO or guarantees, plus access to their network, potential legal advice, M&A assistance down the road, even help thinking about future exit strategies eventually.
That's a pretty comprehensive suite of support. Quite appealing. So for those interested, what's the best way to initiate contact? How do you get the ball rolling?
The most direct route is using the contact form on their website. They actually make a point of saying you don't necessarily need a full, polished pitch deck right at the start.
Oh, interesting. So it's more about starting a conversation.
Exactly. It suggests they want to have an initial chat first, see if there's a basic alignment, a potential fit, before diving deep into documents.
And they aim to be quick on the uptake.
Yes, that 24-hour response goal is something they highlight. If things look promising after that initial contact, they typically aim to issue a term sheet pretty quickly, maybe even after that first meeting.
And then from term sheet to actual investment, what's the usual time frame?
Usually they say it takes about 2 to 4 weeks once a term sheet is agreed upon. Of course, that depends on how quickly the company can provide the necessary information for due diligence and, the complexity of the specific deal.
Okay, 2 to 4 weeks. That's still pretty quick in the investment world.
It is, yeah. Reflects that speed and efficiency they aim for.
So just to wrap things up then, Partnering with an IPO Cornerstone investor and someone like Geller specifically can clearly offer some pretty major advantages for companies looking to go public.
Absolutely. It's really more than just securing capital early, isn't it?
It seems so. It's
Yeah.
about building that crucial momentum you talked about, getting that early validation from a credible source, and also tapping into a wealth of experience and potentially broader support.
Yeah. Exactly. Keeler's specific approach, that direct investment of their own capital, the speed, the flexibility, plus that understanding of the entrepreneurial journey,
That
it makes them a pretty compelling option for growth companies thinking about an IPO.
Right. So if you are one of those companies or maybe an advisor working with one, and you want to explore how Kjøller might be able to support your IPO as a cornerstone investor.
Then the best thing to do is check out the link we've put in the description below this video or audio.
Yep, that link will take you straight to where you need to go on their site to get in touch and start that conversation. They're ready to hear about your plans.